Okay, the analysis of cash flow statement involves exploring the cash flow numbers and try to find out the reason of difference between the cash flow, operating cash flow, and the net income. What are the reasons why these numbers are differing? And what does it help us? It helps us to find out what are the sources from where the company is generating cash. And we know that from both operating activities and the financing activities, company can generate cash, but we like to distinguish that what amount is purely coming from purely coming from operating, and what amount is purely coming from financing. And if you see that there is a big difference between the cash flow numbers reported in the cash flow statement, more specifically the operating cash flow, and the net income which is presented in the income statement, we have to think of the potential red flags. We have to think of potential red flags, which are kind of some warnings that if there is a big difference between the net income, which is coming based on the actual accounting, and the operating cash flow, which is based on the cash-based accounting. And if you see the big difference between these two, you have to think twice, thrice to find out the reason why these are causing. And there's a big role of the financial statement analyst to explore what are the reasons which are causing this big difference. Okay. So here, this chapter, the analysis of cash flow statement, we are continuing our discussion of reformulation of financial statements from the previous chapter. And we like to explore that how much cash is contributed by my operating activities and how much cash is contributed by my financing activities, because the conventional way of preparing the cash flow statement create some problem in distinguishing this kind of activities. Obviously, we know that in cash flow statement, we have three broad headings: cash from operating, cash from investment, cash from financing. But over time, we will come to know that there is a difference in the way that how they make the classification and how actually the analyst should make the classification. So let's explore that. What will be the questions we like to look for the answers, that what are our interest area. We like to see that how cash flow statement can be useful to measure the free cash flow. And we will also like to see that how the cash conservation equation is linked with the cash flow statement, and is it comparable to the financing cash flow. Most often people make confusion that between the financing cash flow and the free cash flow, but we will see that there is a difference. And we'll also try to remind you that what you have learned in the financial reporting and control course regarding the preparation of cash flow statement using the direct and indirect method. And we like to discuss on the problems which arise because we prepare the cash flow statement using the GAAP standard or the IFRS standard. And if we like to reformulate the cash flow statement, what we need to do and what are the purposes of the reformulated cash flow statement, and how can we examine the quality of reported cash flow from operations. Okay. First of all, we like to know about the free cash flow, how we can calculate this. Okay. You recall the free cash flow from the capital investment decision course. Can you recall that you have learned about the free cash flow, capital investment decision course, or from the investment analysis course? Have you heard about this term earlier? Have you heard this term earlier? Have heard this term earlier, fine. So can you slightly recall, can you slightly write your concept in a very short words, 3 or 4 words, what you have understood by the free cash flow? What is it actually? So we like to see that we generate cash from our operations. We have cash available from our operations. Let me write it as C. Fine. You have mentioned it very clearly. Cash flow remains after capital investment and net working capital. Free cash flow, business operating cash flow exceeds its working capital needs and expenditure on fixed asset. Fine. So you see, what you have mentioned in the first part, the operating cash flow or cash flow from operations, let me write it as C. And what you have written in the second part, that you have signaled that you are making investment. You are making investment in net working capital. You are making investment in capital expenditure. You are making investment in fixed asset. Fine. So let me summarize what you like to mention by investment by I. In that case, we can write the free cash flow in this format. So I hope you have got that what I tried to mean by the notation C and I. So the difference between C and I, the cash flow from operations and investment in operations. Remember what you are doing. You are making investment in operations. You are purchasing fixed asset. You are making capital expenditure. You are investing in current asset. So you are investing in working capital. All are investment in your operations. So the difference between the cash from generated from operation and the use of cash for the investment in operations is known as the free cash flow. So we like verify this definition of free cash flow by looking at some calculation. Okay, you see that from the reformulation task, what we already have done, we can measure the free cash flow very easily. So we'll talk about 3 methods for measuring the free cash flow. The first method, remember, this is the definition of free cash flow, this one. But actually, how can we measure it? Okay, so the first thing first, we can measure it by taking the operating income after tax. Obviously, which one? Can you recall the net operating income adjusted after tax? No pet, net operating profit after tax. So you can take that as an operating income. Then you can take the difference of the net operating asset from the beginning to ending. So if you have made investment, more investment in net operating asset, it will be a positive number. So it actually indicates what? Can you recall that what are included in the operating asset? Can you recall that what we mentioned in the operating asset? In the operating asset, in our definition of reformulated balance sheet, can you recall that we include some working capital items, we include PPE items? Can you recall these operating items we included in the operating asset? Okay. So from year to year, you'll see that there has been changes in the net operating assets. So that if the change is positive or the negative, you should take this number here, and we can take this number here to measure the free cash flow. Okay. So what is free cash flow here in our case? It is the operating income which are coming from the reformulated income statement, and we can subtract the net operating asset from the reformulated balance sheet, and we can check that it is our free cash flow. So let's have a quick check by using the Nike financial statements from the previous class slide, previous chapter slide. Okay. So here, okay, it is the, okay, let me take you first to the reformulated income statement. Okay. Here you see that we have operating income after tax from sales, this amount 961, and we have operating income after tax from other operating income, that is this amount 74. In total, we have the operating income after tax, which is 1035. Have you, can you identify this number 1035? And we know that how can we come up with this number? We solved it using our Starbucks financials. Okay, we are using the financials of Nike now. So we are familiar with this number. Yes, no? So we are taking this number higher. Here you see that we are taking the operating income after tax. Okay, this is the number 1035. Now the question is from where the net operating asset will come. You can recall that we also solved the reformulated balance sheet. So from there, we will have the operating asset. Okay. So here you see that we have net operating asset. Which one? This number. This number, net operating asset number, because these are the difference between operating asset and operating liabilities. So in 2003, we have this net operating asset 4,330, and in 2004 we have 4,551. So the change is a positive number or a negative number from 2003 to 2004? And how much is the change? Can you calculate it? 4,551 minus 4,330. This is the 221. Okay. So what does it mean? The change in net operating asset. What does it mean in a very plain language? What does what Nike did in 2004, Nike made additional investment in operating asset, or Nike has divested its investment in operating asset? What do you think? More investment in operating asset, more investment in working capital? Fine. So let's take back this number. You have mentioned that this number is this number is 221. Okay. You see, you have mentioned the right number, 221. So what we are doing, we are taking the net operating income and we are subtracting the positive change in the net operating asset because we have made investment out of our operating cash. That's why we have this amount of free cash flow. Have we got this? How can we make this method? How can we use the method one? Use this equation for calculating the free cash flow? Yes, no, very quick. Fine. Next method, that is the method two. For what? There is no name. I believe that, as per my knowledge goes, that how can you name this method? I do not have the name of this method. You utilize the method based on the data available to you. Okay. Next one, use the disposition of cash flows equation or conservation of cash flow equation, conservation of cash equation. So what does it mean? It means that you generate cash. You generate cash from your operation and you have made investment of cash for your operating purpose. Okay. So what is your next task? Your next task is to distribute the cash to the capital providers. Your next task is to distribute the cash to the capital providers. Okay. So we can write the free cash flow in this way, that you distribute this cash flow to the capital providers. So capital providers can be classified into two groups broadly. One group who expects dividend, another group who expects principal payment and interest payment from you. They are the debt financiers. Okay. So you see that if the difference between this cash from operation and investment operation is a positive number, what does it mean? It means that both equity holders will get the dividend and the debt providers will get their principal and the interest payment back. Okay. But if there is a negative amount, say free cash flow is negative. Can it happen? You have made more investment. You have made more investment than the cash generated by your operation. Is it possible? You make more investment of cash? Is it possible? Yes, no. Is it possible that you make more investment in operation than the cash available with you from the operation? Is it possible? Free cash flow negative. Okay. Famida has said no. Tanzina has said yes. Tanzina, how it is possible that if the free cash flow is negative, it indicates that I have made more investment in operation than the cash available from my operation. In that case, how can we make it? You are right that we can make it, but how? Yeah, but you can make more investment, but how it is possible here? You can make more investment by issuing more debt or by issuing more equity. In this way, you can make more investment. Okay. So when you take more debt, you are not paying. You are not paying to the what would I say, the debt holders. You are not paying. It is not positive for them. You are taking. So if you see that you are taking more net financial obligations in this year from the previous year, you are taking more debt. You are taking more debt. If the opposite thing happens, you are making the repayment. Okay. So we like to use this equation, which is known as cash conservation equation. It indicates that we distribute the cash to the equity holders in the form of dividend, and financial expenses to the debt providers. And meanwhile, if we take the borrowing, or if we increase the borrowing from the from the debt holders, that amount should be a negative. That amount should be written as a negative amount here. We'll mention it why it is negative. We already have mentioned the reason. Okay. Only the distribution, what they will get, will be the positive, and if you take anything from them, that will be a negative. Okay. You see that how can we use the equation? So it actually the breakdown of the F, what I wrote in the previous slide. It is actually the breakdown of the F. So what is it? It is the how can we get this free cash flow? We can get this free cash flow by taking out the dividend, which is distributable to the equity holders, and the financing expenses, which is distributable to the debt holders. And if we take additional obligations, note that it is the obligations. If we take additional obligations, what does it mean? Are we, if it is a positive number, if it is a positive number, are we making payment or we are receiving amount from them? We are receiving. That is the reason that why it is here negative. Now, if the case is just the opposite, what I explained you earlier in alternative scenario, if the company in which you are wanting to calculate the free cash flow, if that company has net financing income, what does it mean? the company is paying to the creditors, or the company itself is a creditor to other companies. When the company has a net finance income rather than net finance expense, the company is itself creditor. Okay. So in that case, it is no longer a positive number, it will become a negative number. So you get the reason. And opposite thing happened for the net financial asset. For that company, you will see the net financial asset is a positive number, and the changes in net financial asset is a positive number, and it will become a positive. And for the same ground, why it is positive, if you understand that why we have said here it is negative, you can get the opposite reason for justifying why it should be a positive. And it is the D is same is same. So this equation, what I wrote here, is applicable for the company which has net financial asset. And this conventional equation, which is also cash conservation equation, it's applicable for the company which has a net financial obligations. Okay, so let's try to apply it for Nike. Say the Nike, let's try to find out what about the net finance expense for Nike. Okay, for 2004, Nike has this amount of net finance expense, which is the 16 here. 16 is their net finance expense. Okay, so let's write here the net finance expense 16. And now we will look at that whether the Nike is a company which has a net financial obligation, or the Nike is a company which has a net financial asset. Yeah, this is the reformulated. So Nike has net financial obligations of 302 in the 2003. Remember, as they have started with the okay, so you see that this is their net financial obligations in 2003, and they have followed this, that they have subtracted the asset item and they have taken the positive of the liabilities item. So the positive number here indicates that that company has a net financial obligations rather than the company has a net financial asset. Okay, so you see the company had net financial obligations of 302, and in 2004 this company has a negative net financial obligations of 289. What does it mean? The company has this negative 289. What does it mean? Does it mean net financial asset, or it means something positive net financial obligations? Which one is correct between these two? Negative 289. There is no confusion. 302 is a positive number. It indicates the net financial obligations because we are taking the positive of the obligations number and negative of the asset number. So negative net financial obligations. So you see, what does it mean? We have repaid the 302. We also have repaid this amount, 289. So what's the change here? 302 minus 289, right? So this is the change of net financial obligations. This is the change of net financial obligations. So what does it mean? This changes in net financial obligations. What is this number here? Is it 591? The changes in net financial obligations. I have written this here. Is it 591? So the changes in net financial obligations is a positive number, and it indicates what? It indicates that the company has taken you didn't understand the point of 591. Okay, let me summarize here. You have got net financial obligations of 302 in 2003. And you have got net financial obligations negative of 289. Okay. Now, if I want to measure the changes of net financial obligations, how can I measure it? 302 minus, then as it is a negative net financial obligations, I should write here in this way, 289. So it should be 591. So what happens here? What happened here? The company has paid all of their net financial obligations of 302, and the company now has 289 financial asset. The company has 289 financial asset. Negative net financial obligations. What does it mean? Positive net financial asset. Is it clear to you? If the company has negative net financial obligations, what does it mean? The company has positive net financial asset. So in that case, what does it mean? Does it mean that the company has made additional borrowing, or the company has made repayment? But the company has made repayment of this 591. additional borrowing. The company had 302 net financial obligations in 2003. Then the company has now negative net financial obligations. What does it mean? Additional investment. Company has now net negative financial obligations. Does not it mean that the company has a now net financial asset? Okay. Let's try to take you to different numbers. Say, for example, forget this. If the number is like this, say the net financial obligations is 500 in 2004, what would be the change? Change would be 500 minus 302. It would be 198. What would it mean? It means that company has taken additional borrowing. In that case, it will be negative. As a net financial obligations negative. Okay. But what we are saying here, we are saying that the company has now negative net financial obligations, right? So what does it mean? The company has now net financial asset. So if the company has now net financial asset, what does it mean? The company has made repayment of this. The company has made repayment of this. The company has made repayment of this amount. And now this company has this amount of negative net financial obligations, or this company has now 289 of positive net financial asset. Okay. So in this way, there is a change of net financial obligations, which is here 591. Okay. So when we are taking additional borrowing, in that case, it will be a negative. If we do not take additional borrowing, we are making repayment, which is the case here, it will be a positive number. Okay. The dividend number, it should come from either shareholders' equity or it can come from the income statement. And if you sum all of this, you will get the same free cash flow number. So there is a 814, 814, the same thing, similar. Now the third, how can you obtain the free cash flow? You can obtain the free cash flow directly from the reformulated statement of cash flows. We have not done this still now, but we can use the reformulated statement of cash flow for getting the free cash flow. Okay. So this is the way that how can we utilize the approaches for getting the free cash flow. Shanta, would you write your question in the chat box? So in the standard statement of cash flows, what we do, we follow either direct approach or we follow the indirect approach. So we generally classify the cash items into three categories: operating, investment, and financing. Operating, investment, and financing. And we come up with the changes in cash and cash equivalent. Changes in cash and cash equivalent. This is a typical statement of cash flows you do, and you are already familiar with it. But when it is a reformulated statement of cash flows, what we do, we like to capitalize this equation in which we have become just familiar. We like to make the reformulation in this way. How? We like to separate out the cash flow from operations. And in my operations, we are making investment. We take those investment, cash investment. It can be investment in working capital, and it can be investment in fixed asset or capital expenditure. So the difference between these two, we already have mentioned that this is the free cash flow from operating activities. And again, note that what we will do this, we are making the reformulation, or we'll apply this not in today's class, but in next class. We distribute this free cash flow to shareholders and to debt holders and the debt issuers. So in summation, what we are doing, we make the cash payment for the financing activities. Okay. So we are familiar with the indirect method, where we make adjustment with the net income provided in the income statement for the accruals, and we make the cash from operations. But in direct method, we separately collect the positive amount, which gives us positive operating cash. And we have some cash expenses, which are negative amount. We subtract those amount from the operating cash coming from operating activities to get the cash flow from operations. Okay, this is a typical statement of cash flows, nothing special. This is the direct method, that what we do, and we do not like to spend time here, but we like to spend time for the problems associated with the standard statement. And we'll talk about each of the problem with the typical statement of cash flows, and how can we address this problem by making a reformulated cash flow statement. And we'll talk about it in next class. Okay, what we have learned so far is that cash flow statement provides some information, and that will be useful for us to estimate or to find the free cash flow. And it will also help us to estimate the free cash flow which will happen or which will be generated in the coming years. So we talked about two methods in previous class, and that how can you get the free cash flow. One method, we have seen that if we take the cash flow from operating activities and we subtract the changes in net operating asset, then we get the free cash flow. Obviously, we solved an exercise using the Nike numbers to get the free cash flow. And in second approach, we use the cash conservation equation, which we denoted as it comes from the payment to the equity holders and payment to the debt providers. And we define the free cash flow in this way: cash from operations and investment made for operations. So, okay. So when we have made the breakdown of this equation, so what we wrote that this D includes the payment to the equity holders and receipt from the equity holders. It summarizes this. And the F summarizes the payment to the debt providers and receipt from the debt providers. So if we make a further breakdown of F, we get something like, if the firm has net financial obligations, and if we receive, that means we are not paying them. So net financial obligations, we have made it negative for the company who take more obligations than the investment in financial asset. Then if we make interest payment, obviously when we have taken the financial obligations, we are in a position to make the interest payment. So that interest payment will be like this, net finance expense. Okay. And we know from where these components come. So if you have the reformulated financial statements, these are some ready-made materials you get from the reformulated financial statements. So it was number 2, cash conservation equation. We mentioned that how can you find out it? And in third approach, what we mentioned that if you have the reformulated cash flow statement, you can immediately get the free cash flow from there. So in today's class, what will be our purpose? To prepare a reformulated cash flow statement to find out the free cash flow and to match it with whether the method 1, method 2. You see, from here we are getting the free cash flow in this way: operating income minus the changes in net operating asset. And method 2, I just have written, if you write in this way, net finance expense, then changes in net financial obligations. Now, if you make payment or receipt, that will be summarized in D. And in the reformulated cash flow statement, what you will see that the application of these two together, to get the free cash flow. And you will see it is also known as, this one is known as financing flow. Financing flow, for the financing part, flow to the financing part includes payment to the finance providers, includes the receipt from the finance providers. When you will see that, you will get it more clear. Okay. Now, what is it? This is the standard GAAP statement of cash flows, and this one is very much familiar. You are very much familiar with it, and we classify the cash flow items into 3 headings: cash flow from operations, investment, and financing. And usually it is a positive number, usually, not always. Usually it is a negative number, and usually it is a positive number. And we measure this final line item, which is changes in cash and cash equivalent. So the purpose of the statement of cash flows, I just like to review it. The purpose of the cash flow statement is to explore the items under these 3 categories, which are causing the changes in the cash and cash equivalent over the year. So that is the purpose. And he mentioned that when you see that there is a big difference between the operating cash flow from operations, and the net income, this is a kind of warning sign we have to explore. Okay. So what we have mentioned, that we will see the application of the 2 methods to prepare the reformulated statement of cash flows. So you see the basic structure of reformulated statement of cash flows. If I write it in the form of equation, so that you can immediately relate that what has been written here. You see a cash flow from operations. So if we summarize it in this way, cash flow from operations, OI. And if we summarize the cash investment in this way, it includes the, actually, what does it measure? The investment, cash investment, in which things we make investment. So we make investment for the operating part. We make investment in operating cash. We make investment in working capital. We make investment in property, plant, equipment. These things, all these things are summarized in the cash investment. So we know that if we have the reformulated cash flow reformulated income statement, we have a reformulated balance sheet. We have an item or we have a number which indicates the changes in net operating asset. So what is it? We know that how can we find out the net operating asset, the difference between the operating assets and operating liabilities. And when you have the difference between the net operating asset of this year from the previous year, you get the changes. So if you subtract it, you get what? You get free cash flow. This is nothing new. We already have learned about it in previous class. And here you see the cash paid to the shareholders. Can you recall that what I wrote in the previous slide to denote all of this? Paid to the shareholders, D. And cash paid to the debt holders and issuer. If we denote this by F, this is another definition of free cash flow from the financing perspective, or you can say that cash paid for financing activities. So it is from the distribution perspective, and it is from the organic perspective that what we do with the free cash flow. Free cash flow actually indicates what? It indicates the remaining cash flow from operation after making investment in operations. Okay. And alternatively, free cash flow is the available cash flow for the fund providers after making all the necessary investment. So fund providers can be categorized into equity holders. Fund provider can be categorized as debt holders. So you see, so reformulated statement of cash flows will be will follow this structure, and you can verify this equation from here. And we mentioned that this equation is cash conservation equation. Okay. And if you follow the approach method 2, write again, the free cash flow is equal to for the firm which has a net financial obligations, net finance expense, it is positive because it is given to the debt holders, and dividend 8 is given to the equity holders. And if we take the new debt obligations, new debt obligations, it should be subtracted because we are not paying them, rather we are taking from them net financial obligations. So this is the way that how can we find out the free cash flow for the firm which has a net financial obligations. If a firm has a net financial asset other than the net financial obligations, you have to make some changes what we talked in the previous part or previous class. Okay, so let's try to talk about that. What are the problems associated with the cash flows we prepare using the GAAP or using the IFRS, whatever it is? Generally, we now follow the IFRS convention. Okay. First thing first, you have learned it very well that how can we measure the free cash flow. So we worked with the free cash flow calculation for the Nike. You probably can recall that we calculated this in previous class. Okay, so think of the free cash flow. We have got the 814, right? Free cash flow for the Nike for 2004 is 814. Now, the question to you, do not forget that how we can measure the free cash flow. In the method 1, we measure the free cash flow by operating income, cash flow from operating activities, and we subtract the changes in net operating asset, right? Okay. You see that this is the cash flow statement of Nike, which is prepared based on the GAAP standard. And do you see any item which looks like the cash flow from operating activities from this statement? If you look at this number, write the number in the chat box. We are talking about the 2004. From here, do you see any number which reflects the cash flow from operating activities? If you find out the number, please write it down. On the chat box. I'm waiting for your response. $1,514.4. Okay, let me write it here. 1,514.4. Now, what does it indicate? Changes in net operating asset. Does it indicate the investment in operations? Does it indicate the investment in operations? When you have the net operating asset of 2003 and net operating asset of 2004, if the net operating asset in 2003 is 100 and if the net operating asset in 2004 is 150, can we say that we have made investment in operating asset for 50? Can we say? Yes. So you see that do we have any line item in this standard statement of cash flows which indicates the cash used by investing activities or cash spent for investment purpose? Do we have any number from here? Or from here, this is the remaining. Do we have any number which reflects the investment in operations? We know that what is meant by operations. And we know that there are some numbers which reflects that we have made investment in operations. And we have a total number which indicates that how much we have made investment in our operations. If you can find out the number, please write down the number in the chat box that how much investment has been made in the 2004 for the operation. Let me check that what you have written. 55 decrease in inventories, decrease in prepaids and other current assets. So there are so many things. Why you are talking about only two things? You see that we have made investment in property, plant and equipment. We have sold some property, plant and equipment. We have purchased some subsidiaries. Then so many things we have done. What do you think? Yeah, do we have any number? Let's say if we think of that, this is the number, the cash used by the investing activities. So it indicates that we have made investment in our operations. 946.5, 946.5. Does this indicate the investment in operations? look at the items, or there is a question mark that this item does not look like that we have made investment in operations. Among the items listed in the cash used by investing activities, do you have any question that there are some items which does not look like that they reflect the investment in operations? Yeah, purchases in short term is not for operations. So do not forget the definition of free cash flow. Obviously, this is the difference between the cash flow from operating activities and investment in operations. But we see if we take the investment in operations by this number, cash used by investing activities, we will do a mistake. Why we will do mistake? Because the standard cash flow statement identifies the investment in a way which includes both investment in operating asset, also investment in financial asset. That's why if we take this number, cash used by investing activities, to reflect the investment in operations indicated by changes in net operating asset, will we commit mistake? Yes, no. Yes. Now, let's talk about the cash flow from operating activities. We assume that this cash provided by operations is a good proxy for the cash flow from operating activities. Now, let me ask you, you see that net income, this is an indirect approach of measuring the preparing the statement of cash flows. You know what is direct approach and what is indirect approach. We make adjustment with the net income for the accruals in the indirect approach. Do you know that net income includes the interest income? Net income includes the interest income. Yeah. So in that case, if we take the cash flow from operations from this number, cash provided by operations, do we make mistake? We do mistake if we use the cash provided by operations as a proxy for cash flow from operations. So what we can conclude? We can conclude that the standard cash flow has multiple problems for which we cannot take the value directly from the standard cash flow statement to measure the free cash flow. So I have given you the hint of some problems. Let's discuss about the problems first in detail. Then we'll try to find out a solution, that how can we make the solution, okay, for this kind of cash flow statement, which has been prepared based on some conventional accounting standards. Okay. You know that how can we prepare the cash flow statement using direct method? I do not like to spend time here, and we already have seen that how indirect method has been used. Okay, now we will discuss on the question that what are the problems with the standard type of cash flow statement. Okay, first of all, We know from our previous discussion that the cash of which we like to show that how the cash has been changed over time to get the ending cash in the ending day of the financial year. You see that the changes in cash which has been happening throughout the year, some cash are changing, some cash are changed for operating reason, some cash are changing for financing reason. Okay, so if we make any changes in cash for operating reason or for working reason, in which part this cash should reflect in the statement of cash flows? Cash flow from operations, cash flow from investment, cash flow from financing. In which part it should be reflected if we have made any changes in cash for the operation purpose? If we make investment of cash for the working purpose? Okay, you see that that should be part of the investment in operations, and that should be part of the investment in operations. Now you see that I'm not actually indicating only the working capital portion. You can still spend cash for purchasing PPE. You can spend cash for purchasing PPE. So that also causes changes in cash. So in summary, if there has been any changes in cash which are related to operating purpose or which are related to working purpose, that should be ideally come in the investment section, which is indicated here. Here in the cash flow from operations, we reflect the investment in working capital, and in cash flow from investment, we reflect the investment made for the long term or made for the fixed asset, these things. Okay, but in general, if there has been changes in cash, for what purpose? For the operation purpose, that should come in the investment part. You probably can recall that C minus I. Okay, investment part. Okay, but you see sometimes you make investment of cash in financial asset. So let me take you to here. Okay, you see, you have used cash for this purpose. Have you used cash for this purpose? You have used cash for this purpose. This is investment in operations, or this is investment in financial asset? So this is investment in financial asset, but where we are reflecting it? We are reflecting it in the cash in investment activities. But at the same time, what we are doing, we are also reflecting the transaction for which cash has changed. Say we have made addition of PPE, and for this purpose, we also have used cash. But you see that cash here is used to get cash is cash has a spent for both purposes, but the purposes are different. So what do you think? Which will be good if we allocate the cash used for operating purpose in the investment section and used for purchasing financial asset in the financing section? Okay, but the standard accounting standards does not allow us to allocate this item like this purchases of short-term investment in the financing section. Accounting standard does not allow us. Okay, this kind of investment should reflect in the investment activities. That is what we have learned from the financial accounting, right? So this is a problem. Okay, so we have learned that we can find out the allocation of cash between operating and the financing. Okay, so how can we find out the allocation of cash into the operating cash and the financing cash? You probably can recall that we mentioned when we discussed about the reformulation of balance sheet. When we discussed about the reformulation of balance sheet, we mentioned that let me take you to the numbers so that you can immediately connect. Okay. So we talked about that the cash and cash equivalent can be allocated to operating cash, this one, operating cash, and the cash equivalent. And we know that how can we allocate it. I'm not going to learn that how can we allocate it. And you see that from 2003 to 2004, how much has been changed in the operating cash? So in 2003, it was 53. And in 2004, it is 61. So here we have seen that there has been increase of operating cash investment of 8 million. Okay. So if we have the overall changes in cash and cash equivalent over the year 194 million, out of 194 million, 8 million should be for operating cash. And the difference between the cash and cash equivalent and the cash used for operating cash is for financial asset. So we already have learned that how can we allocate it. You probably can recall that we talked about the for a typical manufacturing company, this is 0.5% of sales in a respective year should be used for operating cash, and the remaining cash will go for financial asset. Now the question is, there is no reference from where this 0.5% come. So what can we do? We can look at that what the account manager is thinking about the holding of operating cash. So it depends on his budget. It depends. It differs from business to business. But if nothing is mentioned, we assume for manufacturing companies it is 0.5% of sales. Okay. So in respective year, we measured the operating cash for 2003, and in 2004 we measured the operating cash, and between this years difference of operating cash, we measure what is the increase or what is the decrease. So this breakdown cannot be reflected in the standard cash flow statement, but we will use it in the reformulated cash flow statement. We will see that how can we use the breakdown. We already have used it in the reformulated balance sheet. Okay, next one. What's the next problem? You see that if you make a sale of investment in short-term debt securities, I have made it very specific. Out of the three sections, cash flow from operation, cash flow from investment, cash flow from financing, where this item will be appear in the standard cash flow statement? Sale of investment, proceed from selling investment. Write your response in the chat box. It comes to cash flow from financing. Okay, so it may mislead you. It may mislead you. Now let's talk about a case so that you can understand that how it mislead us. Okay. Let's talk about a company which is Lucent Technologies. It is mentioned that this company was a hot stock during the tech bubble happened in the 1999, when the company, if the company added is a internet company, that company was traded at a higher price. Okay, so that company had been very attractive to the financial analyst for making investment. This company, Lucent Technologies, so one of the companies which was very much attractive to the analyst. You see, this company, for this company's net income and cash from operating activities, both are given here separately. Okay, for each of this year, 1997, 1998, 1999. So in the period of 1999, this company was traded at a price earnings multiples 50 times over. So you can understand that how much attractive this company was during the 1999 or in the during the period when there was a bubble. Now, this is a good thing. Over the time, this company is experiencing higher net income. You see, the 1999 net income is 3 times greater of the at least 3 times greater of the 1998 net income. Okay, so the profit is increasing. So you also expect this company, as this company is booming, this company will go for making more investment in the operations, because this company is doing very good job. But you see, in the corresponding year, the cash from operating activities declined steadily, declined sharply from 2,129 million to 1,860 million. And in 1999, you see it has been shortfall of the cash from the operating activities by 276 million. So it is a, so will you be concerned if you see that this company is doing very much good in terms of the net income, but the company does not look good in terms of the cash from operating activities? So these are in opposite direction. So that is the reason why it is happening. Okay. And another thing, you expect that the company make more investment over time in the property plant or the long-term asset for the technologies, or purchase the patent of the technology in this way. But you see that this company's use of cash in investment activities declined over time from 3,371 to 3,100 million to it has become almost half, 1,787 million. So you will ask question that what's wrong with this company? What is happening? Why this company is spending less for the investment purpose? And it should be higher over time. But what is happening here? Is there anything wrong? But you see that what is happening in the cash in investing activities, this company has included purchase of investment securities, and this company also has included the sale or maturity of investment securities. So this company has included some proceeds or some payment which are exclusively for financial asset, right? Investment securities, these are financial asset or operating asset, or the Lucent technology. For the Lucent technologies, the investment in investment securities, is their operating asset or financial asset? These are financial asset. Okay. Now you see that if we just talk about this part, what they have done here, they have made investment of 450 million and they have received a proceed after selling of this investment of 1,132 million. So if we make a difference between these two, we get a positive number. That is that they have made a net proceed. They have made a net proceed from their investment in financial asset. Don't you think by adding this positive number, they have underestimated their cash used in investing activities in the financial statement? By adding this positive number, you know that how this positive number comes, because they have sold 1,132 million of investment securities. They have purchased this 450 million of investment securities. So they have received 682 million of cash from selling of investment securities. Don't you think by this number they have underestimated the cash spent for investing activities? They actually made investment in operations by 1,787 plus 682. They have made investment of this amount in their operations, but inclusion of these two have misled this number. Sorry, this number. Have you got it? So in this way, what is happening? By including the transactions of financial asset in the cash in investing activities, often the financial analysts get misled from the standard cash flow statement. Okay. Next thing I would like to talk about, what is the problem? IFRS and generally accepted accounting principles give you some prescription regarding how you show the cash interest in the standard cash flow statement. Okay, so if it is the cash interest payment, or you receive the interest from your financial investment, where you reflect this, if you follow the gap, what do you think? Where you reflect this item? As this has been prepared in the, okay, it will be good if I'll show you the direct method. Now, write your answer in the chat box. Where you are showing the interest payment and interest receipt, if you follow the gap, in which section you show it? Operating activities. Okay, but what do you know? That from your financial, it should be in the financing section. It should be in the financing section. Okay. And in the IFRS, it allows some flexibility. What kind of flexibility? It allows us that you can show the interest payment either in operating activities or the financing activities. So when it gives more flexibility, it will be a big problem, because the accountants will use it for their own purposes to make either cash from operating activities look good, whatever the purpose appropriate in his or her case is. Okay, so let's see. For the Nike, this interest payment and the interest income will come from the financial statements, or in detail, you will see, you know that these are different between, there is a difference between the interest expense and interest payment. So one is accrual based, another one is cash based. So these are cash based. So if we have the interest payment of 37.8 million and the interest income of 15 million, it will come from the notes, footnotes. And if I have the cash flow statement from the Nike, you see that they have made a supplement disclosure of cash flow information like this, that they have made this amount of interest 37.8 in 2004. So this is the interest payment they have made. And after subtracting the interest income they have received, it is the net interest payment. And we know that interest payment gives us some tax shield, and this is the tax shield. And if we subtract this tax shield, we get this amount is after tax interest payment. 14.3 is after tax interest. Okay, now, so where you expect that this number should reflect in the cash flow statement based on the nature of this item? Should it be in the cash flow from operating activities? I mean, you are justifying that what we will be doing for the reformulation. So it will be good that we add back you know that in the standard cash flow statement, GAAP has subtracted this, the cash, net cash paid for interest. Okay, so to take it to the financing section, I will show it in the financing section. Okay, what we need to do in the operating section, should we add back this amount or we should subtract again from the operating part? If we have the operating cash and you have mentioned that we should take out this cash paid for interest from the operating to the financing, we should reflect it in the financing part. Should we add back the interest payment, net interest payment, or we should subtract it to the cash flow from operating activities? Subtract. What do you think? Why? You see, the interest payment, it has made the cash outflow, and you have made the subtraction already in the cash flow from operations part, right? Now you like to take it. You like to take it to the financing. You have to add back to the operating part, and you have to subtract it. You have to subtract it in the financing part. Okay. Next thing. Next problem, tax cash flows are all included in the operating section and not allocated to operating and financing. We talked much about in the reformulation of income statement regarding the tax allocation. And you see that when you have the standard cash flow items, what you're doing, you are making a line item here, income taxes paid. What do you think? You paid taxes for operating purpose, you paid tax for financing purpose also, right? But all taxes you are showing higher, you're showing all taxes in the operating part, so it creates problem. Okay, so that's why we need to separate these things out. The statement does not incorporate non-cash transaction. This is 100% correct that non-cash transaction cannot appear in the cash flow statement. But what's the problem? The problem is that, say for example, let me take you one example. You have made acquisition of a company, you have acquired a target company with issuing shares. So you have got the company and you have issued shares. Okay. Have we made any cash transaction here? Have we paid any cash to the target company shareholders? Yes, no, very quick. Have we made any cash transaction? We have not made cash transactions. Okay, you have made, you have given the answer, no, thanks. Now the question to you, have we made any investment? So you see that cash flow statement is not giving us the number, which is 100% correct because there has been no cash transactions, but we have made investment. We have made investment. So you see from the standard cash flow statement, you do not get a right picture of the investment you made. Similar thing might happen in the financing. You will see in other examples. Let me take you to the application that how can we address this problem and how can we prepare the reformulated statement of cash flows. Okay. First thing first, okay, you are reformulating the cash flow from two parts, from two perspectives. One is in this way, you can recall that cash flow from operations, operating income, you are subtracting the investment made for operations. Here, what we will be doing, will, if we make payment to the equity holders, it will be added. If we make payment to the debt holders, net finance expense, it will be added. But if we take the proceeds either from equity holders or from debt holders, it will be subtracted. Say I'm writing for the net finance obligation, changes in net finance obligations. If we take more debt, we are not paying them. We are not paying them. So that's why you are subtracting it. Okay. So this obviously follow this, what we already have. You can recall the method 1 and method 2 here. Okay. You see, first thing first, you have a cash flow from operations. From where? From the standard cash flow. With this cash flow from operations, what we need to do, you need to add back the net cash interest payment after tax. We just have discussed about it. We have to add back. Okay. We already have talked about what is the purpose. We will separate it out to the financing part. That's why we are adding back, because we know that it has been subtracted. The interest, net cash interest payment has been subtracted when we calculate the cash flow from operations. That's why we are adding back. Okay. Now we will find out what are the investment in operations we have made, and we will sum all of the investment. Now you see, in the cash flow from operations, if you what you have to do here, in the investment part, if you make any investment in financial assets, that has to be added back, because you know that you want to show it in the financing part. Okay. Now if you have make sale of financial asset, that should be subtracted, because you have added the proceeds here. So it should be proceeds in the financing part. It should be proceed in the financing part. And if you have made any non-cash investment, that should be subtracted. And if we have any increase in operating cash, you can recall the 8 million we have made investment in operating cash, and that is also part of investment. That's why we will add all the investment. Here, what we are doing, we are adding all the investment to measure this. Okay. And here we will say net cash interest outflow. This is the payment to whom? This is the payment to the debt holders. We reflect this by F. Then if we make financing, what we are doing, we are taking money from the financiers. We are not giving money to them. That's why it is the subtraction. And if we purchase financial asset, what we are doing, we are using our cash, we are spending cash, we are not taking cash. So that's why it is positive. And if we make the sale of financial asset, and if we make the increase in cash equivalent, this is not for the operating part. You can recall that this cash equivalent investment is for financial part or financial investment. Okay. So we will try to solve a problem, and you will see these things, this abstract equation will be very much clear to you. Okay. So what we will do now, we'll try to look at the cash flow statement of Nike, and we'll prepare the reformulated statement of cash flows for Nike. Here it is the standard cash flows for Nike here. Okay. What we have seen in the very beginning, we will take the cash provided by operations. Okay. So let me write it here. Cash provided by operations. Okay. So first of all, we are taking the free cash flow. We're taking the free cash flow. You can recall the method 1. We talked about free cash flow from the financing activities in the second part, or in alternatives section. You see, We will start the free cash flow calculation by talking about the cash flow from operations. So what is it? You can recall this one. 15. Let me write it in the round number. 1514. Now, can you recall that I mentioned that we have to add back the interest expense net payment? So we already have talked about that we have made this amount of net interest payment 14.3. So what we will do, we'll add back the net interest payment after tax 14 million. Okay. So what we have got from here, we have got the cash flow from operations. So this is about how much? 1528. So actually, what is it? It is the operating income. And you see that we have made adjustment. It is not directly from the cash flow statement. We have added the interest payment. Now we have to find out the investment in operations. Okay. So let's see what are the investment in operations. You see that here. Oh yeah. What is the statement of cash flows? Oh yeah. How much cash they have used for investing activities from the standard cash flows? 947 million. We know that there are some items which are like financing. We'll talk about it. But how much they have spent for investment? 947. Okay. For what? Cash investment. We'll make adjustment, but let's start with this. Cash investment as per reported cash flow statement. Okay. So how much? 947. You see, these are the investment in the property, plant, equipment. Then there has been some disposal. Okay, we'll talk about this immediately, but let's talk about something that what we discussed here. So they have made investment in operating cash. It has not been allocated or it has not been separated, but we discussed that it should be separated out. Operating cash and the financial asset. So in operating cash, how much investment has been made by the Nike? 8 million. We know that how can you calculate it? I showed you the difference between the operating cash in 2003 and 2004, that the difference is 8 million. Okay. So here you see the investment in operating cash. How much investment in operating cash we have made? 8 million. Now, the part what we mentioned here. Yeah, this one. Purchases of short-term investment. Now, I like to separate it out. I like to separate it out from this investment. What should we do? We have made investment in financial asset. So we should subtract it. Okay. So how much amount is? 401. Because that investment in financial asset is not the investment in operations. That's why we are separating it out. Now, if we make this summation, we will get how much? 554. Now, can you recall that what should we do here? We should subtract the investment in operations from the operating cash flow of 1528. So what is the difference? 974. So this is the free cash flow. Okay. What we're doing here, do not forget, we are making the reformulated cash flow statement of Nike. Okay. So this is from the perspective of the difference between the operating cash flow from the operations or operating cash flow and the investment in operations. Okay, now let's look at the financing part. Is it possible that if we look at the same thing from the financing part, will you get the same number? Okay, let's see. Someone has asked that, okay, we'll talk about it later. Okay, can you recall that I mentioned that the equity financing and the financing provided by the debt holders will be added in this part. Okay. Actually, how we are getting the cash and how we are using cash for them, that should be summed up in this part. Say, it is actually the financing flow to whom? To the claimant. Who are the claimant? The equity holders and the debt holders. Let's talk about the equity holders first. Okay. Let me take you to the financing section of the cash flow statement. Yeah. This is the cash provided by financing activities. Let's talk about the equity first. Okay. Let me ask you, if it happens, these transactions proceeds from exercise of stock options and other stock issuances, 253.6 amount of million of transactions. Have we received cash from the equity providers or we have paid cash to the equity providers? We have received cash from the equity providers, right? So if we have received cash from the equity providers, should we subtract this amount or we should add this amount? Do not forget the cash conservation equation. We should subtract. Okay. Remember, in the beginning of the class, we talked about it. How can we use the cash conservation equation? Okay. Yeah. Here. So let me write here the proceeds from equity issuance. How much it was? Around 254 million. We are subtracting it. I do not like to mention the reason again. Now, let me take you again to the cash flow from financing part. You see, immediately after this, there's a repurchase of a stock. What is happening here? The firm is receiving cash from the equity holders or stockholders, or the firm is paying cash to the stockholders? Firm is paying cash to the stockholders. In that case, it should be added or it should be subtracted. According to our equation, it should be added. Okay. So let me take you to that part. Yeah. Repurchase of stock. How much? 420. Next, it has been said that they have paid dividend. Company has paid something or company has received something. So paid something. It should be added or it should be subtracted. When we are paying to the financiers or financial claimants, it should be added. Okay. So let me write here the dividend, and it is here how much? 179.2. Now, if you add all of this, what is it? It is the net payment to the equity holders, right? Net payment to the equity holders. So can you tell me what is the summation? Is it 345? It is 345, right? Okay. So let me use the blank space on the above. I'm not erasing anything. Okay. Now I'll talk about the debt financing. What we are doing with regard to debt financing. Can you recall this? Net interest payment after tax. Are we making payment to the debt holders, or we are getting payment from the debt holders? If our net interest payment is a negative, or sorry, if our net interest payment is a positive number, I mean, we are making more payment. What do you think? Are we making payment to the debt holders? Yeah, we are making payment to the debt holders. So let me take it here. Interest payment, net interest payment. How much it was? 14. Okay. Let's check whether we have made other payment or we have taken new debt from the debt holders. Okay. Let me erase this so that you will not get confused. Okay. You see, there is a proceeds from long-term debt issuance. What has happened here? We have issued new debt. If we issue new debt, we have made debt repayment or we have received new cash from the debt holders. We have received new cash from the debt holders. In that case, should we add it or we should subtract it according to our equation? Issue of new debt. We should add it. Sorry, we should subtract it. 154. Okay, that's why we have subtracted it. Next. There is a thing, you see that reduction of long-term debt. What is happening here? Company has paid some debt or company has taken more debt. Company has paid some debt. That's why it has been reduction. 206.6. So what we are doing here, we are making repayment. That's why reduction of long-term debt. How much? Around 207 million. Okay. Next. You see that we have made some investment. Here it is. Yeah. Can you recall that you have made investment in financial asset and you have what you have done here? Okay, let me move with this. Okay. Can you recall that what you did here? Investment in financial asset. What you did? You separated it out from here, from the investment in operations. But you have used cash. You have used cash, right? So if you have used cash, should we add this number or we should subtract this number? We have investment in financial asset around 401. According to your understanding, when we are using cash by making repayment, by making payment of interest expense, by payment of dividend, we are adding or we are subtracting? When we are making payment to the financiers or when we are using cash, Alternatively, when we are using cash, we are adding that amount or we are subtracting? We are adding, okay? So that's why we are adding here. So someone has asked from me that why we are adding the investment in financial asset. Where someone has asked that why we are adding the investment in financial asset here. You get the answer. That is the reason that why we are adding it. Okay. So 401. Next. Can you recall that we have made some investment of cash in the financial asset? 186 million. 186 million. But you see, if you look at the cash flow statement, out of this total changes in 194 million, some amount is coming from the translation gain. You probably can recall the changes in foreign exchange, okay? Effect of exchange rate changes. So out of the total 194 million, 24.6 is coming from effect of exchange rate changes. So we need to separate the effect of the changes in exchange rate. Okay. So if we have the 186 from the investment in financial asset, now if we subtract that amount for which it has been gone up because of the positive influence of the exchange rate, we see that what is the amount after subtraction will be something like how much it is. If we make approximation in the round figure, we'll see it is 161. Okay, so that is here the investment in financial cash, or you would say the cash equivalent. So that amount is 161. Now you see, if you add all of this, how much payment in net you have made to the financiers, or sorry, the debt holders? In total, you are making payment of 629. So you see that D is getting 345, F is getting 629. So if we add 629 and 345, how much is it is in total? 629 and 345, how much is in total? It is in total 974. It is in total 974. Now you see, have you got the proof of this equation? Yes, no. Write your response in the chat box. You have got the proof of this equation. Okay. Now the big question in the method one, you got how much free cash flow? Let me recall you, 814. Sorry, in method two. In method one, you get free cash flow of 814. But here, how much free cash flow you are estimating from the statement of cash flows? Recall, this is the 3. Can be obtained from the reformulated statement of cash flows. Now you might ask question that why the reformulated statement of cash flows is not giving the same free cash flow we estimated using the method 1 and method 2. It is a valid question. It is a valid question, right? So what is the answer? The answer is that for these reasons, the free cash flow estimated from the reformulated cash flow statement and the free cash flow statement, free cash flow measured from method 1 and method 2 differ. So let's try to identify some reason, very brief, because you can explore it, and this is kind of some self-explanatory. You see, there are some other assets and other liabilities. We cannot distinguish whether they are operating and financing. So if you made this investment in other assets, in that case, you cannot look at that whether it is an operating investment or the financing investment. Okay. Sometimes you see the cash dividend reported in the cash flow statement differs from the cash dividend reported in the statement of equity. So you see that you are taking the dividend payment from the cash flow statement. So if there is anything which you do not know, in that case, it will cause the difference among between method 3 free cash flow and the free cash flow estimated from the method 1 and method 2. Okay. And how much cash flow we have received by issuing share. We have seen that it is available in the cash flow from financing section in the cash flow statement. But sometimes you will see that this amount differs in the statement of shareholders' equity. So we do not know what is the reason that these are causing differences. So that is the reason that why these differences arise. Okay. Now, there are some other reasons you will explore, but we like to talk about that we need to distinguish the cash flow from operations and cash flow from investment activities precisely. But the issue is, it is not an easy task. It is not an easy task because sometimes you see that some cash flows which look like an investment. You see, investment in inventories, which is part of working capital investment. But where you see this item, you see this item in the cash flow from operations. You do not see this investment in the cash flow from investment item, right? So that is the reason that why it is not an easy task. Okay, and when you make gain on asset sale, okay, it can be financial asset. We already talked about it. But you see that this is a kind of non-operating. If it is operating asset, this is a kind of non-recurring item. But if it is a financial asset, the taxes you are paying should be reflected in the financing section, but all taxes you reflect in the operations section. Okay. Now, sometimes to make the cash flow number beautiful, managers engage in some activities which are not desirable. To make the cash flow numbers beautiful, managers may engage in selling receivables to make more cash flow, to generate more cash flow, or managers reduce the planned expenditure for advertisement, which is harmful in the long run. And managers may make delay in payment of the bills or in payment of expenses, which would make the cash flow numbers beautiful, but that will not be a sustainable thing. So these are the some issues, and these are the ways that how can we address the conventional cash flow statement and how can we prepare the reformulated cash flow statement from the standard cash flow statement by using the cash conservation equation. Okay. So this is all about for today's class. And now if you have